guys? In this video, we're going to talk about volume versus open interest. So when you're looking through an options chain, you're going to see these two indicators, volume and open interest. So you should already be familiar with volume and you might be familiar with open interest. But for those of you who aren't, volume is the amount of contracts that are being traded. Just like volume in stock, it's the amount of shares being traded. Volume is the amount of contracts. Then we have open interest. Open interest is the current amount of contracts that are open by current traders. So open from previous trading days. Now these are two important indicators because it can show you what contracts are popular and important and what to look for when picking a strike price. I would say volume is definitely more important than open interest, but when you're trading options, I mean volume related to the price of the option. Now, of course, a contract that's being sold and bought for 5 cents is going to have more volume than the contract that's $10. But when you're looking at strike prices that are close to each other, or prices of contracts that are close to each other, you're going to see a clear difference of which ones are trading with more volume related to the price of the contract, meaning which one has more money switching hands. And the highest volume contracts are what you want to look for because that means there's going to be a tight spread. The spread is the amount of space between the bid and the ask, and a tight spread allows you to exit positions easier for a more desirable price. So when I'm scalping options, 0 day till expiry options, all type of options, really what I'm looking at is what has the most volume, obviously related to the price of the contract. Volume is a massively important stock indicator, and I think it's used by all traders for everything. When it comes to options, it's no different. So let's break this down. Let's say you have April 20th, 420 strike SPY calls. If the volume says 76,000, that means 76,000 of those contracts changed hands today. So they were either bought or sold. So let's say for that contract, you see the open interest is 28,530. That means 28,530 of those contracts are open right now from previous trading days. So those are being carried over to the next day, showing you the open amount of contracts. It's pretty straightforward, guys. I think everyone knows volume is more important than open interest, but they are both good to look at when picking the right option. Hopefully that helped you, and don't forget to subscribe.